This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and this is the weekend's deep dive. First of all, I sort of want to apologise a little bit because I'm seeing some people say these weekend deep dives are just copy and pastes. And you are right, okay? I do just come on here and say the exact same thing. But hopefully you can understand and appreciate I have a plan and I stick to the plan until it invalidates. If it doesn't invalidate and I come on here and just keep saying the same thing over and over again, if I can still keep checking off these boxes and say, yes, everything is moving in the expectation of the channel, then really we should be celebrating that, because that just means we're going to continue to stay on the right side of the trade, continue to go up, and we don't really have to worry too much about having to suddenly take profit or flip defensive or hunt for shorts or flee from, a risk off type event. I appreciate it's a little boring, but again, I think we should try to celebrate the idea that it is boring. Things are still moving in the right direction, because at least that means we for now at least seem to have a good read. We seem to be able to stay on the right side of the trade. So we are still moving towards what I believe is a parabolic blow off top. I still think we are not too far away in terms of time, although price could go a lot higher as I'm about to show you. And I still think that just around the corner is a global recession and a global bear market. When we take a look at the current chart, okay, we are in this third and final angle now. So the question is it about to break down? Okay, or have we got a little bit more of a hurrah, one final squeeze to the upside, and then is this thing going to look super duper parabolic as we're somewhere up here and get a breakdown? Like I said, I know I keep saying the same things, but happy days so far, right? All the while we're pushing into a third angle, then we should have unusually rapid returns for a short while. And again, once we break down, it should be time to start looking for defensive strategies. I'm seeing a lot of this, okay? We're in the early stages of a bull market, the early stages of a melt up, right? The crypto rally is just about to start, right? We're super early to this whole thing. But the reality is, okay, the total value of all publicly traded stocks divided by the GDP ratio is at all-time highs. It's significantly worse than the dot-com bubble, the GFC. Okay, this is ridiculous. So to say that we're at the early stages of a melt up, to me, doesn't make a great deal of sense. And of course, it does not really fit with the base case either. I found the biggest bull on Wall Street, David Hunter, and he is calling for, I mistakenly put 7,000 S&P here. He actually commented somewhere down here to say 7,500, not 7,000. So that would be another 500 point gain from here. And I was just extrapolating out this third angle, just in case you're not 100% sure what I'm talking about. There would be the first one approximately, and there would be the second one, and we're now in this third. Okay, if he's anywhere close to reality, then there might still be quite a lot of upside left. This, if we were to continue to trade up in this third and final angle and not break down from here or not have to set another one later in life, would put us at around 7,000 by March or April. So again, I know it's boring, but really happy days, because if something like this is at play, okay, we're not going to see gains like this from the stock market again in a very, very, very long time. For the record, I do not believe David is going to be correct in this assessment. I do not believe we're going to 7,500. I don't believe we're going to 7,000 either. I think anywhere between 62 and 6,400 will be me thinking that is all she wrote. As ever, I am open to being proven wrong. I will stay long and strong up until the time it becomes unreasonable to do so. But again, so far so good, right? Copy and paste continues to work, and I will keep copy and pasting until it stops working. For Bitcoin, I've got an updated version of this chart for you guys. The base case was, of course, that we would make an all-time high before the halving. We would top before November of this year, qualifying it as left translated. And the reason that is such a pain to deal with is it would imply, instead of a 12-month bear market, it would imply a 24-ish month bear market decline for Bitcoin, which would be its first true secular bear market, rather than a bear market within the context of a macro bull market like all the prior bear markets we have seen. This to date remains the one component of the base case that has not quite played ball for me. As you can see here, okay, we did really well, got the all-time high before the halving, and then I was expecting this quick pullback into a daily cycle low, and off we went to a left translated top. I think it's safe to say that unless the current high of 73k remains the high and we do not see another all-time high, unless that was the top, meaning that we're going to spend the rest of this entire 4-year cycle trading down towards a 4-year cycle low for Bitcoin, okay, if that's not on the table, then this is probably not going to be left translated now. Okay, the only way this could be left translated is if we do not print a new all-time high for the remainder of this entire 4-year cycle. So I don't think that's what's at play. If it is, I missed the top, okay, and we're going to have to try to find a way to deal with that at some point later in this cycle. If, however, you believe that we are indeed going to see new all-time highs like I do, then I think now would be about the time to do it. If we're going to see Bitcoin roughly approximately follow the S&P on this third and final angle, then perhaps we see a top somewhere between December and let's say April, which would probably look something akin to this, okay? If we got something like that and a breakdown, then needless to say, that would not be a left translated cycle. This whole thing would have been half right. It would have been right up to the point where we called the all-time high before the halving, but it would have been wrong thereafter because it did not top before November as originally expected. The most important thing of all, though, is if this is to play out, it will still imply that rather than the standard 12-month bear market for Bitcoin that we're used to seeing, we would get something approximating 18 plus months before we can find that 4-year cycle low again. It would also be a pain to deal with because once we take some profit somewhere up here, okay, there will always be the possibility of a double pump to an October high that we might have to deal with. So hopefully we don't get that. Hopefully what we get is a nice sort of straight chop up towards October and then a normal 12-month bear market. Okay, that would be the easiest thing to deal with. As ever, we'll keep taking it one day at a time. And for now, this remains the only component that hasn't quite played ball for me. If it can just break out to a new all-time high in the not too distant future, then happy days. Okay, we'll still be able to be positioned to capture the bulk of this move, having already nailed down the vast majority of this move. And I still don't discount the possibility that this thing could be about to rocket straight up practically into a earlier than expected high. Okay, if it did, that would just be textbook Elliott wave channel, as you can see here, with 4 being a throw under and 5 being a throw over. That would put us somewhere around 150k, and it could potentially be achieved in a matter of weeks to months. So we don't necessarily have to see this bull market continue all the way into late 2025. As ever, we'll just keep taking it one day at a time. For the inflation, okay, no real changes, but I think this CPI is going to be very, very interesting. I've been making the case anything you do to the M2 rate of change shows up in the CPI with a lag. Okay, we did really well at predicting that because we saw M2 go down, sideways and down, okay, we would see this CPI metric move down, sideways and down. The majority of the market got this flat wrong, if we're honest, okay? All throughout here, the market was saying inflation is sticky, okay? We're going to see resumption of an uptrend in inflation, and I continuously said there's no way, okay, this part of M2 hasn't showed up. Of course, since then, we have seen this start to manifest in the CPI. If you want an update on the curve, okay, there you go. So you can quite clearly see here, we've had down that sideways wobble that the market got wrong, thinking inflation was sticky, and now we appear to be moving down once more. All of that makes perfect sense. But as I said, we may well be getting into a little bit more of a complex situation with inflation. Right now, trueflation has us on about 2.2%, which you could make the argument, okay, is still going more or less in the right direction. But the thing that a lot of people have been pointing out, we reached about 1%, 1.01 I think was the ultimate low for trueflation around about a month and a half ago. So the question becomes for me, did we see trueflation get this slightly wrong? Okay, is it not really reflective of what's going to show up in the real CPI print? Okay, and thus are we going to continue down? Or is the next CPI print going to be very, very, very surprisingly cold to the downside, down towards that 1 level, and then are we going to get some kind of big counter trend move like this? It makes me wonder if maybe we've got to see some more chop. But as ever, we continue to take it one day at a time. We continue to repeat ourselves because for now, the whole idea with inflation was down, sideways, and down, and that is exactly what we've got. And if trueflation was anywhere close to reality, then the upcoming CPI print is also going to be very cold, and then this is going to have all the familiar symptoms of that down, sideways, and down that was expected to show up here. Okay, so I know it's kind of boring. I know there's a lot of narrative out there with people saying things like inflation's sticky and they need to put more hikes on the table. But the reality is, I can't move away from this because this has been more accurate than almost everyone. Okay, all you needed to do was look at this and say this is going to present here with a bit of a lag. And so far, that's exactly what has happened. And again, I make the case, if this thing does move down sharply, then, you know, what do you want me to do? Just believe the narrative and say, well, inflation's sticky. I know some big Druckenmiller type investors have come out and started to call for a return of inflation and this kind of thing. Maybe they'll be right, okay? But again, if the curve ends up morphing into this look, then what do you want me to do? All I can do is say that makes perfect sense and everything's still going according to plan there. The next couple of components, of course, is if we are going to have a bear market and a recession, and I know people are sick of hearing that, but the reality is... The reality is this is a blow off top in the stock market, okay? If you don't think a recession and a bear market is coming, then what you're essentially saying is that is coming for the months and months and months to come. It doesn't make any sense to me. Like I was saying, if we are going to have a global recession, we would likely expect to see unemployment and labour market start to deteriorate. And that's exactly what we're seeing. Non-farm payroll moved to the upside significantly. We're seeing what we've really got is a 4.5% unemployment rate at the moment, whilst the Fed is tweaking the numbers and making it look like a 4.1. I've showed this countless times. I'll save you the hassle today. We did have a little bit of a saving grace with initial claims this week as they came in softer than expected, which means at the hard right edge today, okay, we have managed to pull this black line back down to about here, 227. So if we want to avoid a recession here, if we want to avoid labor market deterioration, we need to see this be a continuation of a downtrend from this moment. Okay, we need to have seen that be the top. But if we look left at what happened, what we saw in 2008 was we got right to the top of this range, had a plunge, and then it ripped on a breakout, leaving something like this on the table. And of course, if this is to manifest, and I'm not saying it will, although that is my base case that it will, if we're to see something like this, then very, very quickly, a lot of people are going to say, oh, the recession callers were finally right. At the moment, we do indeed have a soft landing, but there is really no support for the soft landing narrative on the slightly more medium term. Henrik's recession indicator here, which comprises non-farm payroll, unemployment rate, average hours worked, and wages and salaries, is showing the recessionary trigger with the signal on the momentum oscillators that we saw in all prior occurrences of recession. This, coupled with that SAM recession rule that has triggered 3 months in a row now, against a backdrop of people that are absolutely sick of anyone calling for a recession, against the backdrop of the stock market going parabolic, to me, everything still looks to be going according to the base case expectations. Like I said, I'll continue to stay long and strong and hope that I'm wrong about this. I'll continue to stay long and strong and hope that we can grind that third angle well into some absurd $7,000+ numbers. Okay, if we can do that, then happy days, right? I'm going to make an absolute fortune riding this wave up, but it's just not really fitting with my base case. My base case is that this thing is probably going to look a little bit more like this, and then bear market. And of course, when we go back here, that would all kind of make sense. A little bit more of a squeeze, and down we go. So yes, still calling for a recession, still very much expect it, still expect a deflationary component, because I think that CPI is going to continue to drop like a stone, and everyone seems to think, including Druckenmiller, that inflation is sticky. Of course, I'll happily hold my hands up and say I'm wrong if I turn out to be wrong. And I do humbly ask, okay, that you do not tar me with the recession doom poster brush, because I have been long and strong and trading in and out of this thing publicly the entire way up. I still remain long and strong. I'll show you the positions in a minute. And like I said earlier, the only missing component for me is to see Bitcoin finally do Bitcoin things. And remember, a lot of people that are new to the space forget just how quickly Bitcoin can move. It ripped incredibly quickly here and locked people out. It did the same thing here. For it to do it one more time would make an awful lot of sense to me personally. The consumer is still very damaged. We've got US credit card debt at all-time highs. We've got auto loan delinquencies skyrocketing with a record amount of debt. And we have started this cutting cycle, which I have been long making the case are cuts into slowdown rather than cuts into normalization. And the prior times we saw this, we did indeed get significant rollovers and bear markets for the stock market. So you can see here, I left a little bit more space to see this thing grind up before it turns down. But again, the longer we go on, okay, then one of two things can happen from here. And that's really, it really is as simple as this, right? One of two things is going to happen here. Okay, we've already kind of done this. So either Camel is wrong and what comes next is a rip-roaring bull market, which would be absolutely be fine with me. I would rather be wrong about a recession and be able to have a strong, powerful trend to stay on top of. Or the other thing is we got here and Camel's about to be right about this, and then we're going to see that rollover and be able to look back at everything I've shown you in hindsight and say, well, actually, that kind of made quite a lot of sense. And fitting in with this whole thing of the consumer being in trouble, credit card debt being at all-time highs, auto delinquency skyrocketing, of course, the cardinal sin based on all of this is to suggest that there will not be a broad-based alt season, okay? I know people don't like it when I say there's not going to be a broad-based alt season, but just hear me out. What if we saw Bitcoin move just a bit higher on this next leg up that I believe is coming for Bitcoin, and then a recession hits? Are we going to see rotation from Bitcoin into alts during a risk-off and demand-destroying event, or Bitcoin dominance increase as people dump their alts in a panic, thinking, wow, I never knew risk could happen this fast. So I've long been making the case, okay, that everyone that was continuously calling for alt season the whole way up would be wrong. I've long been making the case that we would get to at least 60, if not 70% in Bitcoin dominance. And if somehow we can swerve a recession from these kind of levels, then I absolutely believe you could see people dump Bitcoin, move into highly speculative assets, and see some kind of an alt season. I don't believe we're going to get a true alt season. I never have, just because there's so many coins and there's simply not enough liquidity with the amount of damage to the consumer. But if we can somehow swerve a recession, if you don't believe there's going to be a recession at all, and we get this one kind of final push up into the mid 60s or 70 for Bitcoin dominance, it could even happen from 60%. Okay, I see a lot of people targeting that, but I think that's crowded. But the point I'm trying to make here is, okay, if we're close to a top in Bitcoin dominance and we swerve a recession, then I absolutely think a bunch of alts are going to do quite well. Okay, not all of them, not a broad-based alt season, but a good handful will probably outperform Bitcoin significantly. But if you're all in altcoins, okay, we do see one final leg up here, and then I am right about a recession. We do see a demand-destroying event. We do start to see economic slowdown really start to accelerate with a deflationary component, with the stock market tanking from its third and final angles. then I really don't believe you are going to see rotation into higher risk assets. I think what you're going to see is a flight to safety, and everyone be left screaming, wow, who would have thought Bitcoin could go to 80+%? I know whenever I say this, people just rapidly unsubscribe, and it's because I'm not trying to sell you a dream, okay? I know you've been promised generational wealth and you've been promised 1000x on your altcoin bags, but the reality is, okay, there's no substitute for experience. The people that think that this is not their second, third, fourth cycle, this is their first cycle, they've looked left at the 2017 ICO craze and they've sort of said to themselves, well, it happened then, so it will happen again, right? But what they don't realize is people did the exact same thing in the dot-com bubble, and most of those dot-com type stocks went straight to zero and never came back. So I hope I'm wrong for everyone else's sake, but I do think, again, we're going to be able to come back at this in a few months' time and say, well, yeah, that was really obvious, 65% recession, and then way higher than 65%. Don't shoot the messenger, okay? You don't have to, I'm not trying to sell you anything. I'm not trying to convince you of anything. I just present my base case just like the rest of it. And from there, we'll see, right? In a few months' time, I'll either be wrong or I'll be correct. And again, it's not about being right or wrong. It's about staying on the right side of the trade. So let's see if Bitcoin can break out. Let's show you my positions. Okay, we're still rocking with a couple of positions on the S&P 500. We are right into support here, okay? So we really need to hold this if we're going to hold it. But so far, so good. I definitely don't want to see price trading below this prior cycle low, as that would be a failed cycle, and that would imply a much deeper correction. So that's something to watch out for. Nasdaq was showing a little bit of relative strength on Friday, so happy days there. And the Dow Jones, we didn't add a second position because I wanted to allow the profit from this trade to kind of cover me in the worst case scenario should some black swan event show up and see everything start to tank. So far so good. Okay, good couple of 1,000 points profit here. We'll sit long and strong and see if it can hold its third angles, and we'll go from there. Gold is still very late in its weekly cycle. We're going to find out. Okay, we're going to find out if this is about to roll over and target that, or if perhaps that's going to come after one more of these daily cycles. So perhaps we've got another daily cycle low in here first, and then we can look to target the weekly cycle low window. Either way, that weekly cycle low window is coming into focus and will present the best opportunity to get behind some longs across the board in the metals and metal miner positions. We are still positioned in the level 3 members section for any kind of explosive move here via some miners. So happy days there. We'll see how it goes. Bitcoin looks like it almost followed my yellow squiggle, but I don't think we're going to get the move above the breakout level in red here. It seems to me like what we're going to get is some kind of little walk down into that cycle low November 5th, which of course coincides with the elections. And then same stuff over and over and over again. We'll be looking to get long out of that cycle low, double the exposure without taking additional risk, and then be seeing if we can actually target a breakout out of that cycle low. So I would think if I grab my yellow squiggle, the second half will probably end up looking something like this. And so that is how I see it. Everything still seems to be going according to plan apart from Bitcoin, but so long as that thing can pop in the next few weeks, then happy days, long and strong. As ever, we'll just keep taking it one day at a time. We'll keep checking in on this thing every weekend, and as and when I have some new positions to get behind, as and when those cycle lows show up, I will be continuing to add new positions and new longs out of those. If you're a level 3 member, look out for the video for you guys, because I've got something cool I want to share with you in a minute. Everyone else, have a fantastic weekend, and I hope you're doing well in life. Until next time, take care, all the best, cheers, bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies on a bump.